Good morning, everyone. So we're going to be running a 10-part series on the top 10 tax tips. Okay, these are our top 10 tax tips, and so today we're going to do number 10, which is choose your fiscal year end appropriately. So if you're a sole proprietor, chances are you're going to have a December 31st year end. It doesn't necessarily have to be your year end, but it is usually recommended just for the fact that your personal tax return includes your business schedule as well. If you are a sole proprietor or a partner in a partnership, it just makes life a whole lot easier when you're dealing with slips and rates and pro rates and all that kind of stuff when it comes to a tax return. If you do not have a fiscal year end of December 31st and you're a sole proprietor, I strongly recommend you get an accountant that knows what they're doing when it comes to that, because it is not a normal thing. Okay, so if you're a corporation, you have 365 choices any day of the year. Usually you end it on a month, at the end of a month. What I tell my clients is, what month are you going to have the most amount of money and the most amount of time to deal with your corporate finances, signing documents, answering questions and queries from your accountant when they're preparing your year end. You find that month, and then you subtract 3 months from that, because that would be the deadline, right? And then that becomes your year end. So if you think that you are going to have the most amount of time in June, then a March 31st year end would be spectacular. But if you're not going to have any money in June, that's also going to be a factor too, because your taxes are due to be paid. Pick a fiscal year end that makes sense to you. Sometimes we're a little bit handcuffed when it comes to that. If you run a seasonal business, obviously it means that your business only runs for portions of the year. Maybe you don't want your year end to be in December if you are a golf course, okay? You probably want it to be in October or November. That way you definitely have enough time to go over your finances at the end of the year. Also, there's some tax planning when it comes to making your fiscal year end in the next year in which you incorporate. You can defer dividends, which means you're deferring your income, which means you're deferring the taxes on that income. You could potentially take money out of your corporation and not pay tax on it for 18 to 24 months. Okay. It all depends on your situation. So talk to your accountant. Your tax year end, it does not coincide with your incorporation date, although it can. Your very first year, you have 53 weeks to pick a year end. So that could be any day of the year. Okay. So I hope that helps. Take care of yourself, take care of your family, take care of your friends, and be well.